Welcome back, my crypto people, and thank you for tuning in to another C3 Crypto Conversation and Charts. Today, we're going to be discussing the current market, where it's at, what kind of price points to expect. We're also going to be discussing the executive order that Biden signed regarding digital assets, as well as talking about some of the other commodities correlated to Bitcoin and how they are performing. So before we begin, let's go ahead and take a look at the market. Over here, we're looking at Coin 360, and we are on 1 hour performance. Block size is volume, and there's quite a bit of red. We have Bitcoin is currently down 2% at 40,810. Ethereum's at 2,670. Solana at 86. Right now, the only green squares we have on the screen are Waves, which is up 6.2%. Near is up 2.4%. We have Rune is up 0.36%. And that's about it worth talking about. Let's go ahead and look at CoinGecko and see some of our top performers. Over here, we can see Bitcoin for the day is down or is up 7%. Ethereum is up 4%. BNB is up 2%. XRP is up 6.2%. And Lunaterra is up 12.8%. So we've really been talking about Lunaterra and XRP on this channel lately. And it's really exciting to see those in the top performers. But let's see really who the top performer has been. And Waves on the day is up 32.6% at 28.58. Thorchain at 535 is up 29.6%. Near is up 16% at 1142. Synthetics Network Token is up 13.7% at 464. Lunaterra is up 12.8% at 99.38. Stellar Lumens is up 9.5% at 0.19. So the rest of it falls kind of below 10%, but it's exciting to see the market stepping up. Let's see who our top performers for the week are. We have Rweaves up 58%. Or Waves is up, my apologies. Waves is up 58%. Rweaves up 19.9%, almost 20%. Synthetics is up 16.5%. CeeLo's up 13.5%. Zcash, Terra, and Monero are both up 7, 8, and 13%. So it's great to see the market turning around. We like to see at least some sort of relief rally, but is this long term? And that's what you should be asking yourself. Am I trying to get into the market for a pump, or is the market being prepared for a dump? Hence the title of this video. The market has recently made a jump, and normally jumps insinuate one or the other. They trap liquidity in traders, but we're going to get into that in the charts in a minute. Over here on Google, you can just see the top articles from CNBC. Biden just put out an executive order on cryptocurrencies. Here's everything that's in it. That was 11 hours ago. We have Biden crypto executive order focuses on 6 government priorities 6 hours ago on Market Insider. The Hill has Biden crypto's order spurs jump in Bitcoin price 1 hour ago. So you can tell that we have a common theme in what's going on. Biden has just made steps towards regulating cryptocurrencies. Well, we're going to dive into what that means, but let's go ahead and take a quick overview on all of our crypto relevant news. So we can see over here with the nice refresh that Nifty News, Artai Lopez, NFT, the market top, Alibaba massage gun scandal, and more. Not really a relevant article. Binance unveils plan for world domination by buying up companies in every sector. That might be interesting. The future of work, companies open offices in the metaverse. Regulations and industry leaders react to Biden's executive order on crypto. Sanctions on Russia and Belarus will include crypto. European Commission. Crypto.com airdrops LeBron James NFT collection to eagle-eyed Super Bowl ad viewers. Does the future of DeFi still belong to the Ethereum blockchain? Tracked crypto donations to Ukraine surged to $108 million as Kraken, Bored Ape joins in. Dubai establishes virtual asset regulator and announces new crypto law. Web3 platform integrates social commerce app into Circle's payment infrastructure. Biden signs executive order on crypto to authorize all government effort to consolidate regulation. And that is the article we will be diving into before getting into the charts. But let's continue down. Lockdown to metaverse. Pandemic leads crypto entrepreneur to new business headquarters. Cake DeFi launches a $100 million venture arm for Web3 gaming fintech initiatives. And the Federal Reserve works with China's blockchain ally for instant payments. Bitcoin transfers fees briefly doubled, yet remain exceptionally low. If any of those articles sounded interesting to you, you should check them out on cointelegraph.com under latest news. You can dive deep, but we are diving deep into the regulators and industry leaders react to Biden's executive order on crypto. And this is published by Turner Wright on Cointelegraph. The proverbial doors of policymakers are wide open. This is now a national conversation in the U.S., said Circle CEO Jeremy Aller. So now that we have Biden acknowledging digital assets in an executive order, in my opinion, this is a very bullish scenario. This is something that could be what sparks a hyperbolic bull run, at least for Bitcoin. And I think Bitcoin, we are moving into Bitcoin season. And so those of you curious about what's in the future for your altcoins, unless you're holding a top layer one, I'd be highly hesitant to hold on dearly to those altcoins unless I had a long-term mindset. But to get back into the article, we can see that Biden said the approach outlined in the executive order will reinforce U.S. leadership in the global financial system and safeguard the long-term efficacy of critical national security tools like sanctions and anti-money laundering frameworks. He later went on to say below, for those of us in the crypto community, my apologies. Later below was stated by Jeremy Aller, co-founder and CEO of crypto payments from Circle, added, for those of us in the crypto community, in my humble opinion, this executive order should be viewed as the single biggest opportunity to engage with policymakers on the issues that matter. The proverbial doors of policymakers are wide open. This is now a national conversation in the U.S. And in my opinion, I don't know how much more bullish it could be. We all know in the real world, there's no way that governments are going to allow something that they cannot regulate. So the sign of regulation and the acknowledgement and initiative taken to begin regulating digital assets is, to me, a sign that they've accepted, adopted, and are preparing to have mass adoption and figuring out how to regulate it as it comes. So in the short term, I don't know what to expect, but this is very bullish. In the long term, I still think we're going to see extremely high prices later on in the year. We just have to get through this roller coaster. Not financial advice. As I say all the time on the channel, we are not financial advisors. We never provide financial advice, and you shouldn't take financial advice from people that look like this. Let's continue on. Over here, we have the other article on Cointelegraph. Was Biden to sign executive order? Biden to sign executive order on crypto, authorize all government efforts to consolidate regulation. So in this article, the document does not announce any restricted measurements, but it will undoubtedly lay the groundwork for more focused federal oversight. And it talks about the Department of the Treasury will take the lead in developing policy recommendations for mitigating both the systematic and consumer risks associated with digital assets. The Financial Stability and Oversight Council is directed to assess global and domestic risk and highlight policy gaps that should be closed. Matters of national security, combating illicit finance will become a whole of government concern, with all relevant agencies directing unprecedented focus of coordinated action on crypto-related risks. In addition to addressing risks, Biden's executive order makes a nod to digital assets and the potential to expand the accessibility of financial services and contribute to maintaining the U.S. global financial leadership. Specifically, it directs the Department of Commerce to devise a framework ensuring the U.S. is competitive. And right here is the key word for you guys to take away, that the U.S. is competitive in the digital asset space. So for those of you that think crypto is not going to make it or not going to be here, rest assured it is here and it is here to stay. So let's go ahead and slide into the charts. So what we have on the charts is we have, as you can see in my tabs, quite a bit for you today. I've had myself a field day today. My apologies on the later stream. We eventually want to get these earlier to you, but man, have we been busy, and boy, are we excited. So right now, let's go ahead and start with total market cap. So you can see the total market cap has been at the bottom of the channel. And for those of you that this is your first stream and our listeners that are new to the channel, crypto market cap as an entirety began being charted in March of 2014. and you can watch it's been inside of a positive ascending channel since then. So in this channel, we have respected it for going on 8+ years. Currently, we are at the bottom of this channel. I do not anticipate us falling out of this channel. So now let's talk about what that means and zoom into current time. Let's go ahead and go to a shorter time frame, make this easier on our viewers. Zoom in here, a couple of double clicks, we should get some better viewing. All right, so over here, we can see that we can still fall a little bit and be inside of our ascending channel, and that would maintain a bullish sentiment. So even though we are in a bear cycle, I still believe that there is bullish sentiment and we have bullish fundamentals, especially with the recent testament of how valuable crypto can be as a relief to oppression, as a substitute to deflate or to inflation, and for so many use cases between the Canadian concerns and the geopolitical issues with Russia and Ukraine, that we have really proven the value of non-sovereign digital assets, and that's what cryptocurrency is. So it's been such a privilege to be on this journey with you guys. I'm so excited. I hope you can hear it in today's stream. But anyways, back to where I was at. My apologies for the tangentive thoughts. Right here, you can see we could expect at least another 10% fall in total market cap and still respect and support our ascending channel. What that would mean is that to me would be the blow off bottom that we've mentioned multiple times that we're looking for. We're looking for some sort of violent move to the downward direction to insinuate that the bottom is in, the short positions have been set, and they're ready to drive the market upwards. So when we're looking at the total market cap, my apologies before we switch off, we'll do the quick short-term summary. Total market cap in a short-term concept does not look fantastic. It looks like money's leaving the market. And if you've been watching Bitcoin, and we'll get to that in a minute, money has been leaving the market. Bitcoin has been falling, but that's okay. We just came off of a massive pump, or as the video is titled, a jump. So we jumped up 8 to 10% in total market cap. That's been exciting. We're going to blow off some of that steam. Ideally, what we're looking for is we're looking for a slight retest. So we go rise to level 1, retest, and then we can rise up to level 2. And at some point, we'll begin to retest our resistance level of $2 trillion. And when we break past that, ladies and gentlemen, in my opinion, bull run is here. It's time to look at your favorite projects and tell all of your friends that you've been in crypto first. So now let's go ahead and see if it's the same story for Total 3. Total 3 on the 1 hour candles does look just as questionable, but in the longer time frame, it doesn't look nearly as questionable. You look at the day candles that recently printed 3 hours ago. Well, according to our indicators with Market Cipher, this is a very bullish print. We had a buy dot insinuated down here in Market Cipher B. We had a 16 under a -5 on Market Cipher DBSI. You can see all of our stochastic RSI and MFI is heading in an upward direction. This is a bullish looking indicators, as well as we're getting ready to retest the channel that Total 3 has been in since November of last year. So what we're looking for is we are looking for Total 3 to go ahead and break out of this channel and hopefully do something along these lines. Rise, level 1, retest, rise, level 2. That's what we're looking for. And ideally, we are around the corner from this happening. I think that the news is going to drive a short-term panic. I anticipate some cheap pricing in the next day to 10 days, or today is the 8th. So in the next 1 to 7 days, I believe this run will begin sometime between March 15th, and it will be a very exciting run. And what kind of run do I think that we're going to be seeing? Well, I'll give you guys a quick sneak peek at a traditional stock that was absolutely incredible. So in case you're wondering what we're looking at, these are day candles, and this is nickel. And I think Bitcoin has the potential to start moving like this. But let's go ahead and stay in order. So after we finish the Bitcoin chart, we're going to slide into the Bitcoin dominance chart. Over here, we're in Bitcoin dominance, and it looks like it is getting ready to do a minor retrace before an uptrend. As you can see, we are risen up. We've done a retest. We've risen up for higher highs again. We're doing a small retest. We're grabbing this nice area of interest in the charts where they ripped away from earlier. They generally like to grab that before pulling off. I understand we're looking at Bitcoin dominance, but all of these charts can be perceived the same way. Just as an asset, there's liquidity in all of them. So anyways, talking about Bitcoin dominance, what exactly does this mean? What is this chart representing? Well, this chart represents how dominant of the entire market cap Bitcoin is. So currently, Bitcoin consists of 43.77% of the total market cap of cryptocurrency. What would it mean if the Bitcoin dominance chart were to go up? Well, if the Bitcoin dominance chart were to move up, that means that the rest of cryptocurrency would be losing market cap share and Bitcoin would be gaining market cap share. And so if you see on a little bit of a Fibonacci work that the next spot for Bitcoin dominance to go to would be pushing 50%. That would be taking another 7.3% of market cap of what is currently at a 1.67 trillion. 1.77 trillion. My apologies. So that would be pretty brutal for a lot of you holding some speculative altcoins or some unproven projects. I don't know if it would be that brutal for those of you with top tier layer ones and some of the top or upper DeFi projects. But I tell you what, this chart to me looks like we are getting ready to start Bitcoin season. And so now let's go ahead and see what that looks like in the traditional charts. Now this is the SPX. It's currently sitting at 42.77. We are looking at day candles and we are getting a bearish indication. You can see market cipher DBSI down here. Insinuate we will be looking to finish this wave out over the next couple of days. And depending on how these prints go, will kind of give us an idea of what to expect in the next following weeks. So right now, we notice that I expect the dollar to continue to struggle over next day to 2 days to 5 days. So this is what I would anticipate for the dollar. It's got plenty of room to go down over the next week. But speaking of sovereign currencies going down, let me jump forward in the charts. Oh, no, we're not looking at the dollar. My apologies. We're looking at the S&P. I saw SPX. I was seeing DXY. Sorry, ladies and gentlemen. All right. So this still looks like it's going down. The S&P 500 still looks like it's going down. It's at 42.77. It doesn't look like it's trying to find any support anytime soon. I would anticipate we're going to come down and retest our EMA lines right around 38.83 or hopefully around the 4,000 range. Let's go ahead and look at the Dow Jones, and it's on the 18-hour candles for you guys. And over here, we can see that the Dow Jones looks very similar, a little bit healthier than the S&P, but when we go into longer time frames, looks slightly questionable on the 3-day as well as the 5-day. So I would be hesitant to be in traditional stocks. It looks like they're getting ready to take a hit, but what I don't think is going to take a hit is gold. Wow, does gold look impressive? This has been a fun asset to watch. We've been calling it on the channel. We were telling you we expected it to come and retest all-time highs at 2072. And sure enough, look at this. From July of 2020, when we shared with you guys on last week's stream that we expected gold to be coming up and retesting an all-time high, it did that it did it yesterday. So gold went ahead and broke all-time high, obviously got heavily rejected, and has been doing a correction since. So I have close eyes on gold right now, and I'll tell you why. Because if gold can find support and continue on an upward movement and break through all-time highs, there is no stopping it. And I'll show you in just a minute. But what we're looking for is we're looking for the rise, the retest, and then the next level. And so you guys will continue to hear that. You will be sick of it, but we will drive that into you. Let's go ahead and take a look at this move. We have a rise. We have a retest. Now we're hoping for the next level. Now, with a little bit of GAN work, you could be seeing levels as parabolic as 32, 3,400. And so that's something to really think about, because if gold were to pump up that far, and a lot of people would say there's no way that a traditional stock, especially a commodity like gold, can move like that. And my argument to them is, what do you think about nickel? And I'll give you a minute to just soak this chart in. We're on day candles. I mean, it looks even more violent on 1 hour candles. But let's take a look at what this move was. So fortunately, we love our trading view. We got all the tools so we can have our fun. Let's go ahead and look at, we started this month out at 24,934. And in a matter of 6 days, nickel went up 300%. 6 days, 300%. So you can't tell me it's not possible. You can't tell me that gold can't make the same move. And when you're talking about commodities like gold, like nickel, those commodities, those are the commodities correlated to Bitcoin. So when we start seeing nickel making 300% moves in 6 days, and gold over here, and it's very modest but still impressive, we'll even give it the same pump. We'll go to March 1st. %10 in 7 days. So there's no wonder that Bitcoin started moving up, and we made an 9% pump in a matter of a couple of days from 38 to 42. So I think this is bullish, and I have all eyes on the charts right now. I'm losing sleep watching these, because it really, the next moves are going to dictate, is the bottom in? Are we looking at, and when I say it's a bottom in, I'm looking for a violent move for the bottom to be in, but I believe that the time may be near. I think that there's a lot of perfect, it's the perfect storm. There's so many variables falling into place to create and to push this mass adoption of the crypto community. And I am absolutely just thrilled with it. So I'm sorry, this chart looks like it got a little crazy. Let's go ahead and skip up to oil. So oil is a very interesting asset. Oil generally operates and moves in a negatively correlated to Bitcoin. So it's kind of important to pay attention to oil. When oil prices rise, typically speaking, the price of Bitcoin falls. So we want to look for oil to do a little bit of a correction and retest. And boy, would that be a bullish sign for crypto, specifically Bitcoin. And as you can see, we have those indicators. Oil on the day candles has now printed on our market cipher DBSI a 9 over a -2, which is a bearish print. And Bitcoin in the converse has printed a 16 under a -5, which is a very bullish print. So for the short term speaking, this is a very good look. I would expect a pump up. I am looking for Bitcoin to test 44, 45K. 45.7 is really the heavy resistance point. I'd like to see us break through it. I'm not convinced we will. But either way, I'm way happier being at 46, 47 than I was at 38, because I do believe we have a correction in play. And I do believe that correction will come once everyone is looking in the other direction. So when everyone feels like they've missed the train and they're buying Bitcoin at 47, 48, 52K, that's probably when they'll do, as Beth said in lucky number 7, the Kansas City shuffle. Look over here, now we'll go here. And so I expect to see that before I think the trend reversal will be in. It typically happens. You have a violent move to the top before we start heading in a bear cycle, and you have a violent move to the bottom before we start heading in a bull cycle. So be on the lookout for that. Use that as one of your indicators and pay attention to sovereign currencies. So we're looking at oil and Bitcoin, which are non-sovereign currencies. But let's go ahead and look at how some of our sovereign currencies are doing. And by sovereign currencies, that means a currency tied to a nation or a national currency. Right now, we are looking at the US dollar. This is the DXY chart on TradingView, and it shows the value of the dollar. We recently just topped off at a recent or local all-time high at 99.39, 99.44, my apologies, which is absolutely incredible. Good for the dollar. I'm not sure it's sustainable, but good for the dollar. And as you can see, this is a pretty heavy point of resistance. So let's go ahead and put a bar there to make this visual better for you guys. And now that we have this beautiful bar, let's take a look at this level for the dollar. Well, in 2015 through the December through March phase, we got heavily rejected and we fell down to the 93-cent range. In November of 2015, heavily rejected. By November of 2016, we managed to break above it, but then got rejected by our long-term line of resistance. So another concerning thing to think about. Let's look at the dollar on a longer time frame. That trajectory is the opposite of Bitcoin. Remember the total market cap and what that channel looks like? So this is what the total market cap of cryptocurrency in its conception looks like. And this is what the dollar looks like. So if I were to feel more comfortable holding something long term, it would definitely be the one in the ascending channel, not the descending channel, because we are looking over a very long time frame. Might I add to you guys, this chart peaked in 1984, and this line has been resistance for the last 38 years. So I don't expect us to really spend much time past it, especially considering we're talking about the US dollar and we are in a hyperinflationary period. So I expect a correction at some point, and most likely some point very soon. And if you are to devalue the sovereign currencies, you are going to overvalue or hypervalue something in return. There will always be a trade-off, and I'm under the belief that that will go into the crypto community and crypto assets. That is why we are here bringing these charts to you, bringing this news to you, trying to teach you how to look at these so you can be on your journey, because this is something that I think everyone's going to have to get used to. Anyways, let's go ahead and continue on. I told you guys we were in for a good one. These are some charts. We're having fun. Let's go. So now we're looking at oil, and oil looks like it's getting ready to struggle. So what did I tell you guys earlier? Bitcoin and oil are negatively correlated, which means that when oil goes up, Bitcoin goes down. When Bitcoin goes up, it's safe to assume oil went down. So now that oil is going down and going down more dramatically than Bitcoin, I would imagine that Bitcoin will start rebounding sooner than later. Now, I do not mean that in the next hour, 6 hours, 10 hours. I believe in the next day to few days. All could be as late as sometime around March 15th. But I do anticipate this turnaround to be near, and I'm just curious how violent the event on its way will be. We'll continue on. We've been talking about sovereign currencies on today's stream. So now for those of you listening, we have on the screen the Russian ruble on the top and the euro paired to the dollar on the bottom. And the ruble is paired to the dollar on the top for those of you listening. So on the top of our screen with the Russian ruble paired to the dollar, we can see it just took a hit. Now, what kind of hit was this? From February 17th to March 7th, it dropped 50%. So in 3 weeks, in 2.5 weeks, 18 days, a country's currency was devalued by 50%. Could you imagine what would happen if the dollar in your pocket was worth 50 cents in 2.5 weeks? Because that's what the Russian people are experiencing. Could you imagine? And if that was the case, where would you turn? What would you do? Is Russia the only one that has a currency that is failing at the moment? Let's take a look at the euro. All right. We have the euro on the bottom of the screen. Let's see what kind of hit the euro took. Euro, way more modest because they are not in extreme geopolitical tension, but dropped 6% in just a month. That means that you lost 6% of your purchasing power in a month. If that were to maintain itself within a year, you would lose more than 72% of your purchasing power at that rate. That is alarming. Currencies are not designed to devalue this rapidly. This is why everyone is starting to pay attention and look for a safer alternative, something that is not tied to a sovereign nation or considered a sovereign currency, so it cannot be harmed or restricted during geopolitical tensions. And it's hard to believe there's many things more poised to take that position than Bitcoin and the entire crypto community. And so this to me, I mean, all of these charts are bullish as all get out in the long term. And we'll go ahead and wrap this up for you guys. This is the dollar and the yen, and it's a similar story. It's been fairly bad for the yen. It's struggling. The dollar has actually had quite the pump lately, and it's because we've been defacing the ruble due to sanctions, but I believe that the correction is very nearby. Now, I could see the dollar continuing to pump all the way up to 101, 102, and what that would mean and what that would create would be a squeeze or a liquidation hunt for the crypto community. This would drive all of the markets downwards. This would drive the stock market and crypto market down drastically, but that would also insinuate a bottom. So if the dollar were to pump up to 101 or all the way up to 103, that would also be a sign to me that the bottom is in, the trend is ready to reverse, the dollar is oversold. I think they're overvalued. My apologies, overvalued, and I think that it would be time to really heavily look into cryptocurrency. So, not financial advice. I hope that you guys found some value in today's episode. I'm really excited. I believe that everything going on, although it may create a lot of panic in the short term, that this is really what the space needs for adoption and to be serious about what we need for cryptocurrency to actually be a part of everyone's everyday life. And when that happens, those of us that are first and foremost, we will be rewarded for these trials and tribulations that we're surviving. We will be able to reap the benefits from the roller coasters that we had to sustain on the way to the top. So remember, crypto.com said it best. Fortune favors the bold. Thank you, Matt Damon. For all of you listening, thank you so much. So much love, so much respect, so much appreciation. I'm Al. C3 over and out.